Good morning everyone. Habari ya leo? Tuko salama sote? So today I'm going to take you through a presentation of money market funds and investing and saving. By the grace of God and Willie's team, I was here last week na nikaongea about money market, though it was in brief, but today at least I have an hour, 45 minutes, an hour just to talk through it. I spoke about saving and investing. The difference between saving and investing, there are only three differences, key differences, that is. Moja inaongea juu ya return, ingine inaongea juu ya risk, ingine inaongea juu ya the time horizon. So in savings carry low risk, while investments carry medium to high risk. Investment horizons for saving tend to be short term, vis-a-vis investments and risk. I work for Enwealth Capital Limited. Don't worry, hata kama huwezi soma, I'll just explain them. I work with Enwealth Capital Limited. It is licensed by Capital Markets Authority. Wale wametupatia license ya mimi kusimama hapa na kuongea juu ya pesa and hopefully convert some of you to be our clients. For us to take funds, pesa kutoka kwa public, we need to hold a license. And the people who've given us license are called the Capital Markets Authority of Kenya. Enwealth Capital Limited ni a wholly owned subsidiary ya Enwealth Financial Services Limited. Enwealth Financial Services Limited has been there today. This year is our 13th year. We're in 3 countries. We hold 2 other licenses. Our main business is pensions. Then we have insurance. We are in 3 countries. Kenya ni moja, tuko Uganda, and we are in Mauritius, and we are licensed in those countries to provide insurance services. We have quite a number of clients, by the grace of God, over 200 corporate clients, 80,000 plus 80,000 individual members. And we have around $850 million, pesa za watu wametupatia, in shillings around 90 billion, what we manage. Our vision, a lifetime of financial well-being and dignity. Our mission and purpose is economic empowerment through innovative financial solutions. Values zetu ni trust, excellence, fun at work, and innovation. As I had mentioned, this is our 13th year. We're in 3 countries. We have a team right now close to 70, 3 offices. Our main office is in Nairobi along Ngong Road. 80,000 members, over 200 corporate clients. By the grace of God also we have a CSR program which is called Fanisi Scholarship. Over all those years we've supported over 300 students in their journey from Form 1 all the way to Form 4 with an investment of $200,000. Serving, even though we have offices in 3 countries, our reach covers all those countries, more than 12 countries. We are heading to 14 countries. These are some of our clients. We have both public and private sector. So for private sector, some of them geothermal, public, Nairobi Hospital, MTRH. Today we are dealing with just investment services, but just apart from investment services, vile nimesema, tuna license za pension na insurance. So those are some of the things that we deal with, pension and insurance services. If you break it down to products, those are the products. What I'm going to deal with mostly is what you can see there, which is called the Enwealth Capital Unit Trust Scheme. But all the rest are products that fall under our pension and our insurance. Corporate governance. We are led by our board chair, Mr. Peter Wayaki, and I don't know if you've seen this face around here, Mr. Simon Ofubo. He's our CEO, and he's assisted the board chair via the CEO. Those are the board members of Enwealth Financial Services Limited, which also cuts across Enwealth Capital Limited. Over those 12 years, we've managed to get rewards from the industry. As you can see on the screen, all this is by the grace of God. So into our core topic for the day. unit trust investment. So I will define what is a unit trust scheme. A unit trust scheme, another word for a unit trust scheme is a collective investment scheme. So collective, from the word collection, from the word gathering together. So in terms of investing, there are two ways to do it. Unaweza fanya as an individual, you can invest as an individual, or you can invest. And when I talk about investments, I need to be very specific. I'm talking about financial investments. There are other forms of investment, but I'm talking about financial. So there's where you do it as an individual, kama ni kununua fixed deposits. You go to a bank, get a fixed deposit as an individual. If you want to buy shares, if you want to buy government bonds, you do it as an individual. Then there is another way where you do it collectively. And that's where the term collective investment or unit trust comes in. So what ile tunasaidia, assume a basket. So he brings his 1 million, 1 million, 1 million, 1 million. So it is invested collectively together. There are several advantages of doing it as a collective investment scheme and not as an individual scheme. The benefits of it, from a unit trust scheme, you're able to earn interest income. I will explain dividends, and you're able to get capital gains. And it also brings about diversification. So as I mentioned, Enwealth Capital Unit Trust Scheme, we are given a license to run that one product. And underneath it, we have a money market, we have a balanced fund, we have an equity fund, we have a dollar money market fund, and we have a fixed income fund. I will start with a money market fund. I'll explain why it's called a money market fund. In the banking industry, short-term investments that are near cash, ziwa zinaitwa money market instruments. It's anything that is a year or less. Kwa hiyo, we add one more, which are the government securities, treasury bills. Remember, there is a treasury bill and there is a treasury bond. So the difference between a bill and a bond ni tenure, time. Treasury bills ni short term, 1 year, and they are divided into 91, 182, 364 days, ziko tatu. Treasury bonds ni anything that is greater than 1 year, 2, 5, 7, 10, depending on the government's need. So for treasury bills are included in part of a money market. So that's the term money market funds. If you go to buy a fixed deposit kwa banki yako, if you want to go and buy a fixed deposit, uko na pesa kwa account yako, unataka kuenda kununua fixed. So chances are you'll buy that fixed deposit from your own bank. You are limited to the bank, because if you want to negotiate rates for a fixed deposit, that means you have to go to bank B, you have to go to bank C to go and negotiate. If you get a good rate, now you have to move the funds from that bank to another bank. And most likely they will tell you, we'll give you this rate is for today. By the time uende kwa banki yako ujaze hizo karatasi, move funds, by the time ziende pale, if it's RTGS or inaitwa nini, pesa link, siku itakuwa imeshaisha. A money market fund takes away that headache from you. Fixed deposits, again, what they do is that you are limited by how much you're holding in your bank account. And what you're holding in your bank account determines how much you're going to get in terms of the rate of return. Money market funds takes that away from you. Tukiongea juu ya treasury bills, what is the minimum value ya kununua treasury bill? The minimum value is 50,000 shillings. Sometimes bonds go for 100,000, especially infrastructure bonds. They go for 100,000. Mwananchi wa kawaida, sometimes it tends to be above them to be able to raise that amount. So that means that your risk iko fixed kwa only one bond, which kuiuza saa zingine inaweza kuwa ni shida, and the amount that you need. For you to be diversified, that means you need to hold several bills or several bonds. A money market fund takes that headache away from you. So that is just the genesis of what a money market fund is. The objectives, a money market fund is passive income. Someone said Let your money work for you. Passive income is not a lot of income, but it is passive. Something extra. Compounding of interest. There's an interest that is stated there. So you earn interest at the end of the month. Each and every month you get interest. The fund itself, the money market fund, accrues or earns interest on a daily basis. Then it is credited to your account at the end of the month. Capital preservation just means that your capital is preserved. Ukinipatia 1,000 yako moja, the worst I can do is to return you your 1,000. Nisikulete story nikuambie ilikuwa 900 ama ilikuwa 800. So that is what we call capital preservation. Liquidity just means uwezo wa kuingia na kutoka. The risk profile is low. Investment horizon is 1 month. What I mean by that is the minimum investment period. Ukijoin leo, we ask you to stay in the fund for a minimum period of only 30 days. After 30 days, you are free to leave. Unaweza toa pesa yako yote, unaweza toa in part. It is suitable for individuals, for students, for chamas, and as I explained, this fund, kileta pesa yako inaingia hapa. Call fixed deposit and treasury bills. And just to talk about risk. Fixed deposits are bought from any bank. Any bank can give you a fixed deposit. But banks have tiers or levels. So there's what we call a tier 1 bank. Kuna ile tunaita tier 2 bank na kuna ile tunaita tier 3 bank. If you go to a tier 3 bank, in the same amount, they're likely to give you a higher rate of interest. The same for tier 2. When you come to tier 1, the rate of interest is lower. Because a tier 3 bank is a small, tier 1 banks ni kama KCB, Kina Equity, Standard Chartered, ABSA. There are around 8 or 9 banks that are in the tier 1 banks. Tier 3 banks ziko around 15 to 20. So because they are fighting for the same deposits, their interest is a little bit higher. But the risk even is greater. So this is where it invests. So the minimum initial investment, 1,000 shillings. It is your money, it's not a fee. Ni pesa inaingia kwa account yako. This is just to show that you're serious about opening a money market fund. For students, we've put it lower to 500 shillings. There's what we call an annual management fee, 2% per annum. I'll talk about that. There's no fee, there's no initial fee, there's no withdrawal fee, there's no exit fee. This is our performance. As of the weekend, it was at 14.82. And I need to be very clear that this is per annum. The annual management fee, we take away the headache from you kujua any bank gani inapeana good interest. We negotiate that for you. That's why we charge this fee, 2% per annum. So there's what we call withholding tax. So any interest that you earn, there is a 15% withholding tax on interest earned, not on your capital. That is the performance of the money market fund. December, we are at around 14.8%, where we still are. That means the interest rates are slowly, maybe beginning to cool off. But all this, it just shows you how the economy is. Another thing about this rate, this is not guaranteed. This rate can fluctuate and normally fluctuates on a daily basis. It is an indication of the performance of the economy as far as interest rates are concerned. What you see here is just a link for those people who want to onboard themselves. I will talk about this later. The difference between a money market fund and a balanced fund lies mostly in the risk profile and where it invests. It moves from low to moderate. Now, a money market fund tulisema ina invest wapi? Kwa money market instruments called deposits na treasury bills. On this fund, also it invests in money market securities, but it introduces shares. So this fund it invests in the stock market up to 60% of the fund. Na vile tunajua shares are very volatile, or the other word is very risky. The minimum number of shares is 100. Assuming you want to buy, my good friend ulisema Safaricom. Safaricom unajua pesa ngapi sahi? Ndio wewe usifikirie iko ngapi. Sisi tutakufikiria iko ngapi. So this 1,000, we are saying that for this 1,000 you are able to participate in shares, because si wewe peke yako unakuja kwa hii fund, several people are coming into this fund, and this fund purchases CBAT peke yake, si Safaricom peke yake. It can purchase so many shares based on analysis, and which gives it an advantage and attractiveness to those people who want to participate in shares indirectly. You do not need to think about a broker, because the fund itself has a broker. So when you kuweka tu pesa yako hapa, the fund does the rest. But the risk is the share price can go up, but since there are several shares, zote hazienda chini at the same time. The work of the fund manager is to ensure that the portfolio of the fund has several shares in it and iko balanced. Minimum investment period ni 1 year, just to ensure that that fluctuation is taken care of. So that is the balanced fund. Equity fund is the most riskiest. This one is up to 80%. So for those people who have a high risk appetite and want to trade in shares, this fund kazi yake tu ni shares. But so between hizi tatu gani nzuri? Gani? Money market, balance fund, equity. The first one, money market fund. Hakuna hii risk, si ndio? On average, globally, an equity fund or a fund that comprises of equities over a long period of time outperforms the money market by far. This fund is not for someone atanunua leo, alafu next month unataka kutoka. Chances are you will lose. And capital preservation is not an objective of this fund. So you must be prepared to lose, you must be prepared to gain, but over a long period of time. That's what I say is minimum is 3 years, optimally is 5 years. Back to the question of return. Now this fund and the balanced fund, they operate the same way a share operates. There is an entry price. It's priced in shillings. So if, like for now, for the equity fund is currently is trading at 9 shillings. The balance fund is at 10.5 shillings. The average, how the pricing is gotten, is the average of the returns of all this. So today you come into the fund, it's at 10.5. After a year, it has gone to 11.5. So that is your gain. And each and every stock that pays dividend that is in this portfolio, it comes to you indirectly. It also informs the cost of the fund. But we all know the late Chris Kirubi, sindio? He made his fortune through equities. Na lakini alianza mapema. Apart from property, alianza mapema. So we've lost around 30% in equities, in paper value. And when you buy shares, let's say 5 shares, doesn't mean that tutazishikilia hizo peke yake. We'll keep on changing them as opportunities come. We have a fund manager who does that. Now, since how money market is 1:1, 1 shilling, 1 share or unit. This, assuming you came when it was 10 shillings. You put 1,000 shillings, divide by 10, that's how many units? 100 units at 10. The same way with the stock. When you want to add, maybe imeteremka to 9 shillings. So 1,000 by 9, that means you have more units. Assuming you have 200 units for discussion purposes. By the time you want to leave, the price is 11 shillings. So it will be 200 units times 11, that will be your exit price. These prices are published on the dailies as well. So as I mentioned, the same way as stock operates is where this will operate. You can top up anytime, but for equity and balance, it depends the price that is ruling at that particular day, which determines the number of units that you'll have. So the dollar fund is a dollar money market fund. So this is also a money market fund. The features of a money market fund still apply. The only difference that this is dollar denominated. So kama tuna mtu hapa analipo in dollars, this is the best for you. It is the best for people who are paid in dollars, people who do a lot of business in dollars, people who deal with dollars. One, to ensure that you are not losing when it comes to currency fluctuations. Kubadilisha shillings, back to dollars, dollars to shillings and all that. But where it invests, still short-term security to offer that liquidity. So the return on the dollar currently is between 5 and 6% in the market. And it is tied to the international markets. So we do not have much control over that. But capital preservation, minimum volatility, rate of return monthly, it's part of this dollar fund. So the only difference is the currency, but where it invests is the same. Fixed income, for those people who want wanataka exposure, government securities. Unataka pesa yako tu iko invested kwa government securities. Up to 70% of this fund iko kwa government securities. Minimum investment period, 2 to 3 years. Because we have to create a difference between a money market fund and this fund. Because they are all liquid funds, a money market fund has government securities, which are T-bills, which are 1 year and below. Balanced fund has a portion of fixed income security, government securities, but a little portion. Here we are saying, if you want exposure peke yake kwa government securities, this is the fund. Minimum investment period, as I said, 2 to 3 years, 1,000 shillings, so that you are invested only in government securities. Right now, the government on a float what we call an infrastructure bond. Do you know what is an infrastructure bond? Tumesikia hiyo word, infrastructure bond. We've heard about treasury bonds, ndio? Infrastructure bond is a form of a treasury bond. The biggest difference is that it is tax-free. Interest earned on government securities, they attract 15% withholding tax. Hiyo inakuwa tax source. Before government wakupatia interest, it is tax source. And the other thing about government, you can use bonds ama treasury bills to acquire a loan from a financial institution. A bond is a collateral. Out of all the collaterals that you can have, the best one the banks love is government bonds or government instruments. So infrastructure bonds, the rates are around 17.9%, tax-free. Why Enwealth Capital Unit Trust Scheme, or why Unit Trust Scheme for that matter? Economies of scale. As I said, if you go as an individual to go and do an investment, there will be high transaction costs. If you go to that broker, they will charge you commissions on your investment. But remember, the amount that you put within a fund, it is the fund that incurs the cost. So to you, or the portion that relates to investment is very, very minimal. Diversification, I spoke about it. Not putting your eggs in this basket. It's possible, ukwe na pesa kwa fund ya balanced equity na money market na hizo zingine. Professional investment management, we take away the headache of investing from you. That's why there's that charge of 2% per annum. Access to asset classes and investment strategies. Regulatory oversight, as I'd mentioned, we are regulated by Capital Markets Authority. You are free. As I mentioned, we are regulated by Capital Markets Authority. You are absolutely free to call Capital Markets Authority, hata tukimaliza, waulize kama kuna kitu inaitwa Enwealth Capital Unit Trust Scheme. Before you do any investments, it's normally important for you to do what? Do your due diligence. Ability to join and leave. If you want to withdraw your funds, as a minimum of 2 days to 4 business days, you get your funds either on M-Pesa or your bank account, and sometimes even the same day on M-Pesa. Unapeana withdrawal instruction, unataka kutoa kiwango fulani kwa account yako. Within the same day, you get your funds. So there are 2 ways of one to become a member. There is the old method of filling in application forms. We give you an application form, ama nakutumia kwa email, unajaza. There are documentations that we normally require, a copy of both sides of your ID, PIN certificate, proof of bank ownership. Then you send this to Enwealth, that email address, enwealthcapital@enwealth. Deposit the initial amount, 1,000. Na nikisema minimum amount ni 1,000, imanishi tu ndio hiyo. You can put more if you are able to. That is one way. The second way is self-onboarding. We have a link. You go to that link, just click on create account, then proceed. Itakwambia. Attach the necessary documentation, and you become a member. Obviously, you have to deposit that the minimum amount. The only reason we say deposit amount for your account to be activated, we receive a lot of interest. If we open an account for every interest, that means we might have 1,000 clients, and only 200 or 100 that is active. So just to discourage that, we only activate accounts when the minimum investment is deposited. How does one make a deposit? There are two ways, through paybill and through a bank deposit. Bank, it can be either cash, check, or RTGS. Then for money market fund, each and every fund has its own paybill. Select paybill, put in the required paybill number, enter your name, because if it is the first deposit, subsequent deposits, you will have a member number. You will key in your member number, the amount will be reflected on your account. This is just a copy, a sample client statement. So each and every month, we send you this statement. To keep track, kuonyesha ile pesa umetupatia, here deposit, any withdrawal that you made, any interest in a particular month, your cumulative balance. So one way to check or to follow your account statements, and every end of the month, the client portal ile nimeongea juu yake. And and also we have a mobile application for those who have Android devices. Inaitwa Enwealth Invest. That's the mobile application, and you can pretty much do everything that I've just mentioned. I've spoken about Enwealth Capital Unit Trust Scheme. Legally, these are two different entities. The scheme itself is an entity on its own. So leo kituma 1,000 haikuji Enwealth Capital. Pesa yako haichanganyikani na pesa yetu ya matumizi. These are two separate. Each and every fund has its own bank account. God forbid something happens to Enwealth Capital Limited. We will not use your funds to pay our creditors. What capital markets will do, will just take that fund waipatie another fund manager. Your fund nimesema pia your funds go to a bank account, which is called a custody account. For a bank to have a custody account, they must be licensed by Capital Markets Authority. In the bank, deposit takers, pesa ya bank yaichanganyiki na pesa ya custody account where your funds lie. God forbid that bank goes under. What CMA will do, will just take that custody account and give it to another bank. If the bank is facing liquidity problems, they will not use your funds to pay their depositors. They are two separate. So that talks into safety of funds and what CMA are doing to ensure that funds collected from the public are safe. When you invest 5,000 or 1,000, the entire amount is yours. Only what I said is that a minimum of 30 days. Uanze leo, we lock you in for 30 days. After 30 days, you are free to take either the whole amount or in part, together with the interest that you've earned. Assuming 30 days hazijaisha and you have an emergency, imetokea. Emergencies do happen. We will not deny you those funds. So what will happen, because it is prorated, the rate of interest, remember I said you earn interest on a daily basis. We'll calculate your interest for those days, assuming it's 15 days, and we'll also calculate the cost. We'll give you, if you're closing the account, that is, we'll give you everything. So you're free. The account is yours, everything is yours. So each and every fund, that 1,000, it depends. Do you want a money market fund? Do you want a balanced fund? Do you want an equity fund? So if you want a money market fund, it will only invest in the allowed assets. That means call deposits and government securities.
So there are no shares?
There are no shares, because the objective is to preserve your capital and it is low risk. So if so you opt to go into the equity fund. That's the one that will give you exposure to shares. But remember, you're not telling us nataka shares za KCB ninunulie hii. You just come into the fund. It's the fund that decide collectively where is the best place to buy the shares. So this is a simulator. So I'll leave it at 14.9. Aya, my good friend, umesema how much? 1,000. Umesema 1,000? Umeniambia 1,000? So unaona screen? Tuko pamoja? Okay. Aya, alafu unafanya nini kila mwezi? So at the end of the month is, at the end of the year itakuwa principal amount. Total inclusive of interest ni ngapi? Your interest is what? Remember, it is compounding. Inakuonyesha kila mwezi inakuwa ngapi. Sote tunaona? So hizi ni miaka. So let me just explain it. This is year 1, year 2, year 3, year 4. Assuming you put this amount and you do not touch it at all. So because this is a formula, it goes, this is year 3, year 4. It goes up to year 5. And it shows you the interest that you accumulate for the year. So we are talking about 12 months. Ndio, unaona? Is it clear? Sasa yuko sawa? Aya.
What do you think about the session for those who wamekuwa hapa kuanzia mwanzo? Was it helpful? So just a thought, sometimes we can be having such sessions that involve the larger ministry. I was talking to the cell I think it's last week, and I was telling him it would be good for us to be having just trainings on various issues once in a while. So for example, if next month we decided to do mental health, and we have good resource people who can talk to us about mental health, would it be a good thing to bring the rest of the guys together and we benefit together? So maybe in future with Commissioner Madam HR Pale, we might be coming to you to bring the rest of the team, just so that we can benefit together.